Ladies and gentlemen, good day and welcome to Dixon Technologies earnings call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair from DAM Capital Advisors. Thank you, and over to you.
Yeah, warm good evening to everyone. Welcome to the Q4 FY23 earnings call of Dixon Technologies India Limited. We have the management today being represented by Mr. Atul Lal, Managing Director and Vice Chairman, and Mr. Saurabh Gupta, Chief Financial Officer. I'll now hand over the floor to Mr. Lal for his initial remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Thanks very much, Bhumika. Good evening, ladies and gentlemen. This is Atul Lal, and we also have on the call today our CFO, Saurabh Gupta. Thank you very much for joining this earnings call for the quarter ended March 2023. Coming to our overall performance for the fourth quarter, consolidated revenues for the quarter ended March 31st, 23 was 3,070 crores against 2,955 crores in the same period last year, which is growth of 4%. Consolidated EBITDA for the quarter was rupees 158 crores against rupees 128 crores in the same period last year, that's growth of 32%. Consolidated PAT for the quarter was 81 crores against 63 crores in the same period last year, that's growth of 28%. We are pleased to report a strong performance in the margins in the quarter with 110 bps improvement, and the margins have improved up to 5.2% in the last quarter. This has been led by change in sales mix, operating leverage, cost optimization, and efficiency measures across all businesses, and continued implementation of a strategic price hikes across our various ODM businesses. Coming to our overall performance for 22-23, consolidated revenues for 22-23 was 12,198 crores against 10,701 crores in 21-22, that's growth of 14%. Consolidated EBITDA for 22-23 was 518 crores against 383 crores in 21-22, that's growth of 35%. Consolidated PAT for 22-23 was 256 crores against 190 crores in 21-22, which is growth of 34%. Another highlight was a strong cash generated from the operations of 726 crores in 22-23, which was used in funding the CapEx of almost 450 crores and reduction in gross debt of 275 crores, resulting in further strengthening our balance sheet with gross debt to equity of just 0.14. There has been huge focus of the team on cash conversion cycle and working capital management. Working capital days stood at -2 days at the end of March 23. Our balance sheet strength and enough credit lines from banks enable us to invest in the long-term development of our business. Our basic approach to capital policy always has been on return on invested capital and financial stability, and we have successfully improved our ROC and ROE to 33.4% and 22.4% respectively as on March 31st, 23. And we feel confident the same would keep improving in the upcoming quarters and years on account of improved earnings and working capital efficiency. We strongly believe that we have a platform to sustain a strong revenue growth moving forward through strengthening in the overall demand environment and acquisition of new customers, more specifically the large accounts in the mobile business. Now I'll share with you the performance and the strategy in each of the segments going forward. Consumer electronics, revenues for the quarter was 980 crores with an operating profit of 37 crores and 3.7% operating margin, which is a significant improvement over quarter last year. Operating profit margins have expanded by 90 basis points year on year on account of operating leverage and continuous focus on backward integration and offering our own design solutions. Despite a year-on-year volume growth of 13% and 15% in Q4 and 12 months, 22-23, the revenues were lower by 3% and 17% in the same period year-on-year due to significant downward correction in the prices of open cell in the international market. We have closed the ODM sub-licensing rights with Google relating to Android and Google TV, which will open up a lot of opportunities for us, and 65% of the Indian market is on this operating system. We have also tied up with Samsung for Tizen operating system. With the combined solutions rollout, a large part of Indian market through Dixon ODM solutions will be able to service. We'll soon be starting injection molding, and have also invested in LED part SMT line in line with a continuous focus on backward integration strategy to deepen the level of manufacturing in India. We are also exploring newer products such as commercial displays, for which we have already received trial orders used in public advertisements and information display and interactive boards for use in educational institutes and offices. Lighting. Revenues for the quarter was 270 crores with an operating profit of 26 crores and operating margin of 9.7%. This is an expansion of 260 bps year-on-year achieved through a combination of reduction in input prices, calibrated pricing action, inventory planning, value engineering, and significant initiatives in better sourcing. Apart from sluggish demand, reasons for lowering revenues year-on-year is reduction in commodity prices, freight rates, and migration of LED bulb technology from driver-based to DOB, which are approximately 25% lower priced. Since LED bulbs is the single largest category in lighting, it has a major impact on the revenue growth. We have very aggressive plans for new product introduction in Q3 and Q4 of FY22-23, and will continue the momentum with the launch of strip and rope lighting in Q1 of FY23-24 and professional lighting products in the course of 23-24, besides the launch of new LED bulbs, curtains, and downlighters. After getting export orders from new customers in UAE in Q3 and Q4, we have received our first export order from Germany, which will be executed in Q2 of current fiscal. We are also in advanced stages of discussions with potential customers in US and UK. New smart lighting products based on Bluetooth mesh technology that we acquired from IBAN Illuminations will be launched in Q2 of current fiscal. We have met our threshold investments in FY22-23 under PLI for LED lighting components in line with our backward integration strategy. It will make us even more cost competitive. And the new plant for the LED lighting components in Dehradun has already started operations in the current month. The capital employed in this business has been significantly reduced by 175 crores year-on-year on account of huge focus on current asset management, which has resulted in improvement in ROC to 29% from 22% a year ago. Home appliances. Revenues for the quarter was 281 crores, which saw a robust growth of 20% year-on-year and 15% quarter-on-quarter. Operating profit of 31 crores also witnessed a strong growth of 67% year-on-year and 23% quarter-on-quarter, with expansion of operating profit margins to 11%, led by passing on the impact of commodity cost and exchange rate fluctuations to our customers, improved operating leverage, and cost optimization measures. ROC in this business has improved 30% from 18% a year ago. A new state-of-the-art facility for semi-automatic machine in Dehradun will be operational by July 23. In line with our backward integration strategy, we have set up our own tool room for in-house mold manufacturing. The order book in this vertical for the upcoming quarters looks very heavy. Mobiles and EMS business. Revenues for the quarter were 1,410 crores with an operating profit of 59% and 4% operating margin, which is an expansion of 50 to 60 bits, both on year-on-year and quarter-on-quarter. They got large orders from Jio, for which manufacturing has already started, and for Nokia, our volumes have already increased significantly. Now, in addition to this, we are very, very close to finalizing two large relationships with largest of global brands in India. These relationships with one of the brands is John Manufacturing. And we are likely to start operation in next 5 to 6 months in the current fiscal, for which a new facility of 320,000 square feet in Noida is in the process of being set up, which will become operational in end of Q2. Security surveillance systems. Dixon's 50% share of revenues for the quarter was 124 crores, with an operating profit of 4 crores. We've expanded the capacity from 10 million to 14 million per annum in a new 200,000 square feet facility in Kupurthi. It got operational on May 15th in the current month. Operating profit margins are about both year-on-year, mainly due to shifting expense and duplication of fixed structure. Next, telecom and networking products. Revenues in this segment for Q4 and FY22-23 was 126 crores and 311 crores respectively. Our separate facility in Noida got operational in December 22, and we achieved the threshold of CapEx and minimum revenue in the first year under PLI scheme. We have bagged large orders of 18 set-top boxes from Airtel, and mass production should start by end of Q2 in the current fiscal. Also, we have done another business of Android set-top boxes in partnership with Global ODM. The development work has started and mass production will start from Q4 current fiscal. This has potential to grow even to the other geographies outside India for exports. We are in active discussions with some large global brands for existing and new product categories and building a joint team for R&D with our partners. So today, we have already emerged as one of the largest manufacturers of ONT and Wi-Fi 5 routers for Airtel in the country. Next vertical is laptops and tablets, IT hardware. Revenues for this segment was 92 crores in Q4 and 155 crores in fiscal 2023. This is for our major anchor customer, Acer. The government has recently announced the revised PLI scheme for IT hardware products, soon with a much higher incentive payout. We are studying the contours of the scheme and will definitely be participating in this government initiative, which has tremendous potential. In addition of Acer brand, whose orders increasing monthly, we are in discussion with some large global brands, and for one of the brands, the production should be starting next month. Dixon Electronics Private Limited for our AC control board business. This is a 40-60 JV with Japanese company Dixon to manufacture inverter controller boards for air conditioners, and is based out of a new manufacturing facility in Noida. It started operations in July 22. The JV company achieved the revenues of 79 crores and 239 crores in Q4 and FY22-23 respectively. The revenue potential in this business is huge with healthy margins and 100% ROC. The JV company is a beneficiary under the PLI scheme and will make a total investment of 51 crores over a period of 5 years. We have achieved the CapEx thresholds under PLI scheme of 22-23 and will continue to invest to improve the operations. Wearables and hearables. Revenue for this segment was 65 crores and 300 crores in Q4 and FY22-23 respectively. We have an extremely healthy order book in this vertical, and we are targeting to almost double our 50% share in revenues in this current fiscal on account of not only higher quantities for existing SKUs of TWS and neckbands, but also new SKUs like Bluetooth speaker and smart watches in a new factory which has been set up in Noida. It is in 50-50 JV with Imagine Marketing. They are the brand owners of both. In line with our strategy to deepen the level of manufacturing, the SMT for PCBA will also be invested for. In addition, we have started manufacturing TWS and smartwatches for Samsung and the dedicated plant for mobile phones for Q4 of this current fiscal. Refrigerators, the construction is underway on 20-acre facility in Greater Noida. We are creating a capacity of 1.2 million direct cool refrigerator. This is in the capacity range of 190 liters, 235 liters, with multiple features and different star rating. We have already finalized and with some brands in the final stages of finalizing the tie-ups. These are both global and national brands. The production is expected to start in the quarter OT of 23-24. So I would like to stop here now, and me and Saurabh are there to respond to your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is on the line of Mahesh Agrawal from Agrawal Family Office. Please go ahead. Mahesh, your line is unmuted. Request you to please unmute your line and proceed. Seems there's no response on the line of Mahesh. We will move to our next question. That is from the line of Renu Bed from IIFL Securities. Please go ahead.
Yeah, hi, good evening, sir, and congratulations for good performance. I have 4 key questions. First, on mobile phones, you did share quite a few developments and 2 large brands coming on board in the next few months. So can you help us with how does the guidance on the mobile segment look for FY24-25 based on the timing of these clients coming on board and the new factory getting operational?
So, good evening, Renu. You know that mobile is going to be our largest trigger of growth, and we are in the process of concluding with 2 of the largest brands present in India. New capacities are being created, and I'm hopeful, if not in Q3, or in all probability, by mid of Q3, the manufacturing for these brands will start.
Okay.
A large revenue, I don't want to put a number to it, is going to come in from these 2 brands. It will be very, very large.
The guidance for FY24, how should we look at the mobile PLI and the overall revenue stack up? Should be close to 6,000 crores, or how will the numbers stack based on the pipeline of orders that you have from existing and new clients?
So in 23-24, the government guideline is for 6,000 crores. We are confident of meeting, and we feel confident that there's going to be a significant overflow above 6,000 crores.
Got it. So secondly, given that various PLI incentives and our programs have been operational across segments, can you share what was the incentive income booked in fiscal 23 by Dixon across key different verticals and in total?
Yeah, so Renu, there are only 2 incentives which have been booked across 2, so incentives across 2 PLIs. One is, of course, mobile, where we are absolutely, our incentives up till December 2022 we have received. So our share of revenues for FY22-23 would be somewhere around 9 to 9.5 crores. Apart from that, we have also received and achieved our thresholds for the telecom PLI, which is a JV with Bharti Group. So there, in my sense, the JV revenue would be somewhere around 2.5-3 odd crores.
Okay. And this number should substantially ramp up next year, given the growth across all these entities coming through.
That's right. So next year we will start getting the incentive of IT hardware, which we will start booking. Also for Rexxam JV and inverter controller boards with Rexxam, whereby whatever revenues we do, we will get an incentive on that. And also on the lighting components PLI, we have done the CAPEX. The CAPEX has already begun under the inverter controller JV with Rexxam. CAPEX has already been done on the lighting components PLI. I think so those incentives will start going in the current financial year.
Sure. So thirdly and lastly in this case, in consumer electricals television, if you see margins are very strong this quarter, 3.7. Overall, improving the margins for the year. How should we look at the margin going forward in 24, especially that now the ODM mix in the revenue will substantially improve compared to fiscal 23. So any inputs on this side would be appreciated.
So you're right, Renu. The large part of revenues in television segment is also coming from the ODM stream. So the margins are going to be almost in similar range, in the range of 30-40 bits plus minus for what we have achieved currently.
Approximately 3.5% plus minus range that should come to that.
It will hover between 3.5 to 4%.
Got it. Thanks. I have a couple of more, but I'll get back in the queue later. Thank you so much and all the best, sir.
Thank you, Renu.
Thank you. The next question is from the line of Ankur from HDFC Life. Please go ahead.
Yeah. Hi, sir. Good evening. Thanks for your time as always. Few questions. One was on the overall end market demand itself for durables, specifically TV, lighting, home appliances. And we've obviously seen a slowdown, and we keep on hearing of the same from, different companies. But if you could help us understand, what are your clients/customers telling you in some of these segments? How is your, pipeline or order book, when you look at, say, the next 6 months or so?
So, Ankur, it's been a mixed kind of a bag.
Mm-hmm.
In certain businesses, the order book is flattish.
Mm-hmm.
In certain businesses, the order book is strong. In our case, also please appreciate that being an outsourcing company, also what makes a difference is that what is the share of wallet you are able to extract from the existing customer, and how is your customer acquisition initiative being pursued. So coming to specifics, first 1.5 months so I find the demand in consumer electronics and lighting to be slightly flattish.
Mm.
But fortunately, in last 2 weeks, I'm seeing an element of positivity and things turning around. And in any case, from next quarter, we're heading towards the festive period, so things are looking better.
Mm-hmm.
In the case of mobile, the order book is very, very healthy. We have new customer acquisitions, and we have already started manufacturing for Jio. We have much larger share of wallet of our existing customers. In our existing anchor customer, Motorola, we are assured of a larger order book, including exports, so it's looking much, much better. Similarly, in telecom devices, the order book from Airtel is very healthy, and they're really pushing up their broadband initiative.
Right.
Also, in the case of wearables and wearables, the order book is very, very good. In fact, we have been pushed by our anchor customer to double our capacity from 1.2 odd million to 2.5 million in the next 1.5 to 2 months.
Mm.
So it's a mixed kind of a bag, but I feel in the forthcoming quarters, in a month or two, the things are going to look up significantly. That's what my sense is.
Okay, and also in washing machines, sir, I think that's one segment.
So washing machines, if you see, last year we've grown from 1.1 million in semi-automatic to almost 1.5 million. So this is a 29% growth. And also in the case of FATL, fully automatic top loading, since the base was low, we have grown from practically nothing to 1.6 lakhs. This year our internal plan is to grow from 1.5 to 1.75, and in the FATL to grow to almost 250K. So we have an aggressive growth plan.
Sure. And, if you could just also remind us of your FY24 overall sales and margin guidance, if any you can share. I think on the last call, I think the number was closer to 18,000 odd crores for 24, if I, kind of remember correct, for 24. If you could just help us with that.
So, Ankur, I don't want to give any specific guidance. However, I want to assure the stakeholders that the growth is going to be aggressive. It's going to be much ahead of the industry.
Okay, fair. Fair. And just last one would be if you could share the volume details by segment for FY23, please.
Yeah, hi, for Saurabh this side.
Hi, Saurabh.
So the volume numbers for TVs was, so you want for the quarter or for the year?
No, for the year would be great. Year would be great, yeah.
Yeah, so on TVs we did a volume of almost 3.43 million as against 3 million last year. So that's a growth of 15%.
Mm-hmm.
On LED bulbs, we did. So broadly, we did a volume of almost LED bulbs, battens, downlighters, and other SKUs put together. We did around somewhere around 17 million. So 17 odd crores. And in semi-automatic washing machines, we did 1.5 million. Fully automatic washing machine, we did 1.6 lakhs.
Yeah.
Smartphone outside Samsung, so basically for outside Samsung was around 35.4 lakhs against 25.3 lakhs last year, so there's a growth of 40% there. Feature phones, we did around 55 lakhs as against 30 lakhs, so there's a growth of 82% there. On Samsung smartphone, we did a number almost 94 lakhs as against 84 lakhs last year, so growth of 12%. Samsung feature phone, we did 82 lakhs as against 109 lakhs, so 1.09 crores last year. So there's a degrowth of 25% in Samsung feature phone. And Samsung, as you know, has taken a call to shut down the feature phone, exit out of the feature phone business. CCTVs and DVRs put together, we did somewhere around 74 lakhs as against almost a similar number, 74 lakhs last year. So it's a flattish kind of a number. Sure. And set-top boxes, it was around 14 odd lakhs. And TWS and neckband put together, we did almost 57 lakhs for variables and variables.
Understood. Got that. Okay, great. That's very helpful. Thank you and all the best.
Thank you. Thank you, Ankur.
Thank you. The next question is from the line of Aditya Bhartia from Investec. Please go ahead.
Hi, sir. Good evening. So my first question was on margins that you record on JDM contracts in consumer electronics business. Are they meaningfully better than the EMS part?
So they are. They are definitely, Aditya.
Could you share some range? How much better could they be, and how are you expecting the JDM proportion to be moving in this business?
So if you see our
basically, if you look at Aditya, our contribution of the ODM business in TV has significantly increased from, if you look at from quarter 4, if you look at our consumer electronics LED TVs, the ODM share revenues have gone from 5% to 38%, and at yearly level it has gone from 4% to 23%. So this is one of the reasons why the margins have expanded, because of higher share of ODM, own design solution revenues coming in, which is of course at slightly better margins than the average margins for the portfolio. And also, if you look at continuously, we are migrating more and more to backward integration, and the portion of backward integration. So the portion of PCBs being done for customers like Samsung, for Xiaomi is increasing. We are also now increasingly will go for focusing on more backward integration, like injection molding plastics of TV, apart from panel assembly as well as the motherboard of TV. And in the second half of the year, where we've already ordered the line, we are also looking to do LED bars of TV. So clearly the focus is to migrate more and more on backward integration, focus more on designing, and clearly we have got a large order from Samsung. Once the Google solution comes in from second half of this financial year, those will also have a positive impact on the margin side as well. So clearly the more than the volume play in this business, I think the margin profile has been very positive, and we'll continue to make efforts to drive higher margins in this business.
Understood. From H2 you mentioned, what exactly would you start doing?
We'll roll out a solution from the Google and Android TV, which...
Yeah.
In an ODM, we are the only Indian Google licensee, and in the smart television segment,
So we are unable to hear you. Ladies and gentlemen, it seems that we have lost the line for the management. We'll request all of you to please remain connected while we reconnect the management line. Thank you. Ladies and gentlemen, thank you for patiently waiting. We are still trying to reach the management. We'll request all participants to please remain connected while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently waiting. We have the management line reconnected. So over to you. Aditya, may I request you to please repeat your question or are you waiting for the management to address?
Yeah, we were discussing about the JDM part of the business, and you kind of indicated about the margin benefits that may accrue. Just confirming, from H2 you mentioned that you'll start doing LED cars. Did I hear it correctly?
Aditya, as we were explaining, the whole focus of television strategy is migration to more and more our own design solutions, which we have already launched for our anchor customer. Further, the rollout of the Google TV, for which we are the only ODM licensee in India, and also Samsung's Tizen operating software solution is going to happen in the H2 of the current fiscal. In addition to this, our backward integration strategy is being pursued vigorously. Our mechanical plant, that is injection molding plant, is going to become operational any day now. And also we are committed to make investment in LED bar, which will also be installed in the second half of the current fiscal. So the strategy is migration more and more to our ODM solution and backward integration and generate operating leverage through scale. Further, we are also improving the product mix. We are in the process of launching a commercial display for which we have already received trial orders and the commercial production is about to start. and also interactive TV for educational institutes. So that's the strategy being pursued for consumer electronics.
Perfect. That's helpful, sir. So you spoke about Geo phones in the mobile phone division. If you could throw some light on how large the contract is, what exactly are we doing on that front?
So we already started manufacturing the 4G phones for Geo. The manufacturing has started in the current month, and the order book is fairly healthy. At present, the order book is almost of 1 million units, 500,000 units a month.
Understood. And lastly, sir, did we see any margin benefit due to RM costs coming down in the ODM business, given that typically the pass-through happens with a bit of a lag?
So if you see in our ODM business, there has been a margin improvement across all our ODM businesses. That is the result of value engineering, generating operating leverage because of the scale, improving the productivity and having a control on the cost. And a part of it is also passing on the increase to our customers.
Understood. That's helpful, sir. Thank you so much.
Thank you. The next question is from the line of Abhishek Ghosh from DSP. Please go ahead.
Yeah, hi, sir. Thank you so much for the opportunity. Sir, just in terms of the television segment, how should we look at the volume growth and what can be the share of ODM over the next 12 to 18 months? How are you looking at it?
So, Abhishek, if you see our 21-22 numbers for televisions were around 2.9 million. In the last fiscal, we have grown to 3.4 million, which is 15% growth. Please appreciate this kind of volume growth has happened in spite of the industry not growing. Our internal budgets for the current fiscal are around 3.8 million. And this is a growth of around 10%. That's what we are budgeting for the current fiscal.
How should the share of ODM move from currently 35% in the current quarter? How should that look over the next 12 to 18 months?
So we feel that the ODM is going to be almost 45 to 50%.
Okay. Okay. So large part of the ODM-led margin benefit has already got reflected in the current quarter. Is that a fair assumption, sir?
Well, actually, there's going to be a further trigger when the rollout for our own ODM Google solutions are going to happen. But for that to ramp up, it will take some time.
Got that. Great. Sir, in terms of the lighting segment, while you did allude to a point that, that because of the lower raw material and change in product mix and the change in technology as well, revenues have been muted. But just in terms of volume also, and you had also spoken about the competitive intensity in the earlier quarters, how has that been panning out? And is that also a reason for a slightly, sluggish top line? Just a comment there, sir. Thanks.
Yeah, you're right. The market has been flattish. Right, because of change technology has happened, and also the competitive intensity is there. So in Dixon's case, our large revenue generator has been SKUs like LED bulbs, wherein the growth is not happening. So one, of course, lot of initiative has happened on expansion of the product portfolio. One, more and more product rollouts on the ceiling and downlighter side is happening. Second, a new product category for ropes and strip lights has been rolled out, and the commercial production is just about to start, which is again going to add to our revenues. Further, our professional lighting solutions are also going to be rolled out in second half of the current financial. Also, monetization of the smart lighting, which we had acquired from iBand, will also start happening in the current fiscal. So these are certain concrete steps being taken up by the team for the revenue growth.
Okay. So just one last thing in terms of, you mentioned, the couple of large clients whom you're likely to sign up and their factories are getting constructed. So I just wanted to get some clarity around that. You start doing the capex even before the final deal is signed, and how does it work and how should we look at it?
So please appreciate we have been sharing the progress for a couple of quarters. And these large customer acquisitions take their own time because the discussions happen both on the technical and the commercial tangents. We are almost at the final stages of conclusion, and the commercial production for one of them is about to start soon. For another one, I think it's going to take 2 to 3 months to start. So we are at very, very advanced stages of concluding that. They're almost there. So that's what I'm in a position to share at this stage.
So my only point is, sir, you're committing the capex in anticipation. So I'm saying you have a fair amount of visibility. That's the reason you're going in and committing the capex.
Yeah, absolutely. See, otherwise no capex can be.
Sure. And is Tino arrangement somewhere helping you?
Sorry?
The arrangement with Tino that you had done sometime in February, if I'm not.
Tino is an entirely different project, which to start with is for exports to US market.
Got that. Okay, sir. Thank you so much for answering my questions and wish you all the best.
Thanks, Abhishek.
Thank you. The next question is from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So, sir, I had a question with respect to lighting, right? So you mentioned with respect to, the export starting to Germany, etc., and, some of the technological changes that have happened in the space. So how should we look at the growth in this vertical, say, in FY24 and 25? What is the internal target that you are setting yourself? And also, you had some issues internally in the team, so have they been resolved?
So as I shared that the domestic market has been kind of flattish and sluggish. We are pursuing the product expansion, getting into new SKUs, getting into new category. In lighting as a category in the current laws.
Dhruv, question answered?
Yes, I had one more question. If you could just indicate what would be the capex for 24 and 25. Thanks.
Things would be in the range of 400 crores. Sorry, 23-24 I'm sharing. It's going to be around 400 crores.
Okay, thank you.
Thank you. The next question is from the line of Dhananjay Bagrodia from ASK. Please go ahead.
Just wanted to ask you, maybe I missed this, for consumer electronics, what would be the open cell prices and realization just for the year?
Yeah, so Dhananjay, if you look at the consumer electronics, so our selling prices for the quarter 4 was around, average was around 11,700.
Okay.
And similar to last year, in average was around 14,000. So this clearly it has come down. I'm talking about the weighted average selling prices of all the complete categories that we put together. But the major reason for that is the discount and from 6,600 rupees, it has come down to 11,000.
Sorry, sir, your voice is breaking. We are able to hear you clearly.
I'm saying at a full year level, in 21-22, the selling prices for us at a total level was around 16,400. This has now come down to around 11,500 for 22-23. So clearly there has been a pricing, the value being lower by 30%, mainly on account of the open cell, where the prices are corrected in the international market.
So open cells, would the price decrease be exactly commensurate to this?
Almost like that.
Okay, sure. And so another question here, other expenses as a percentage of sales has been declining. Would it be fair to assume that this would be steady state, or is there scope for more improvement from here?
Yeah, so clearly all the other expenses, depreciation, finance costs, as a percentage of revenues will keep coming down. The only expense which will more or less be in the similar lines, of course, that has been a reduction here in this period as well, the cost of material consumed, which is gross margin.
Sorry, sir, again, the voice is breaking. We are unable to hear you clearly.
So basically, your observation is right. All the expenses as a percentage of revenue, whether it's employee expenses, other expenses, depreciation of finance costs, as a percentage of revenue will keep coming down. We have got some significant operating leverage benefits in some verticals. In some verticals, it will kick in this financial year, and overall, it will start reflecting in. So your observation is absolutely right. It should keep coming down.
Any guidance in terms of what could be the base case or anything of that sort? Hello?
Yeah, so if you look at the operating profit margins, you've expanded by 50-60 bps and gone up to almost 4.2%. My sense is clearly this year also there can be a possibly margin expansion of around 20-25 bps, but one has to wait and watch on the whole demand scenario, which of course should pick up ahead of the festive season.
Sure. And this 5.1 this quarter would this will be obviously on the higher end, and this is something which you see. Obviously, our Q4 is always better. So how should we look at that?
Actually, we got dropped off, and the call has been transferred to the mobile, where I think so the reception is not that clear. If you just allow me 1 minute, we go back to our intercom. Just give us 1 minute, please, and then you can ask the question there, please.
Sure.
Thank you. Okay.
Ladies and gentlemen, please stay connected while we reconnect the management. Ladies and gentlemen, we have the line for the management reconnected. So over to you.
Yeah, please go ahead.
Hello?
Dhananjay, yes, please go with it.
Okay, yeah, so I'm not sure where it dropped off, but I was asking this 5.1% OPM which we have this quarter. This would be a little more on the higher side, and you mentioned that 4.2, 4.3 is what you think would be sustainable for FY24-25, right?
Yeah, so the point that I wanted to bring about that last year, 21-22, our margins went up to as low as 3.6%, mainly because there's a big supply chain impact, commodity prices impact, which has now been completely settled. So we have clearly expanded the margins to 4.3. We think with the benefits of operating leverage coming in, migration to ODM that we are focusing on in most of the verticals, and also more and more backward integration, clearly we see that some kind of margin expansion is possible in this 4.3%. So broadly, you should look at a range of almost 4.3 to 4.5%, 4.2 to 4.5% kind of a range for this financial year.
Okay. And if I could squeeze in one question, I know guidance will be a little tough to give, but approximately any, apart from mobile phones and maybe in somewhat in washing machines, any other segments where you see double-digit growth going ahead?
So I've shared with you the volume growth in televisions.
Yeah.
Now, unit value is also increasing because the open sale price has already gone up by almost 15%. So there will be a value growth. There would be definitely a significant growth in washing machine. I've shared with you our current plan, which is almost 20% more than the last year.
Sure.
There will be, of course, large growth in mobile side. In lighting, I've talked about a growth of 15%. In the new categories of wearables, where the base was low and the order book was extremely high, the growth is going to be extremely aggressive. Then the new vertical of telecom devices, again, the growth is going to be good because the base is low. In Rexam JV, the order book from Dixon is very healthy. So the growth definitely is going to be much ahead of the industry growth. We're fairly confident about it.
Okay. And sure, so last question is booking question. In our mobile phones, X mobiles, the other businesses, what margin would they be approximately?
Yeah, so other businesses, the margin profile would be better as compared to mobile. So if on an average, we have done a margin of 4.1, so broadly, those margin profile will be upwards of 4.5% in other businesses.
So in other businesses, in EMS is going to be around 30-40 bits more than mobile.
Okay, sure. Thank you so much, sir. Thank you.
Thank you. The next question is from the line of Onkar Gudgadade from Shri Investments. Please go ahead.
Yeah. My question was, I was asking about, in an interview you had given a guidance of around 23,000 to 24,000 crores of revenue by FY27. So if we calculate that from current 12,000 odd levels to 24,000 crore, it's almost a double in say next 4 years from 23 to 27. So that is around say 15 to 17% kind of growth in the revenue front. So which is much lesser than the growth which you were talking about earlier, say 1 year back, say growth of around 25-30%. So what has exactly changed?
That was my response to an overall number when the anchor asked me over 4 to 5 years time frame. Here I am very specific in responding to you that the growth is going to be much ahead of the industry growth. I don't want to put a number to it.
Okay, and what is the current industry growth?
So across various businesses is different.
Correct, but as you are saying, it will be much larger than the industry growth. You would be knowing, right? What kind of overall industry?
I want to get into specifics answering that question, please.
Okay, so the internal target is at least to double the revenue in next 3-4 years.
That's right.
Mr. Onkar, request you to join the queue for any follow-up questions as we have several participants waiting for their turn. Thank you. The next question is from the line of Sonali Shah from MK Investment Managers. Please go ahead. Sonali, your line is unmuted. Please proceed with the question. It seems there's no response from the line. We will move to the next question. That is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Sir, thank you for taking my question. Sir, just wanted to understand the landscape of mobile EMS right now in India. You know, there was a news flow around Wistron possibly exiting India. How are we looking at the whole Apple business? Is there something that you can share on that account? How are the Chinese companies doing in terms of, own manufacturing? Are any of them planning to do more in terms of outsourcing where we could benefit from? Just to understand the broader landscape on mobile EMS and where we are.
It's an extremely pertinent question. I would like to respond to it at 2 levels. So undoubtedly, Apple is the flag bearer of mobile manufacturing story in India. And that's on a high growth path. And I would compare it to the Maruti Suzuki story, which gave a flip to the auto industry back in 80s and 90s. And that component ecosystem, that devices manufacturing ecosystem, is on a very, very high growth path. Now, whether the opportunity exists for the Indian players there, we are of a firm conviction, yes. But it's going to take some time. It's going to happen through partnership routes. And definitely there will be a large opportunity for mobile Apple ecosystem for Indian manufacturers, definitely. Second is the EMS story. One, of course, is dominated by the global players, are kind of focused on Apple and Samsung. Second is the Chinese brands. And please be rest assured, more and more Chinese brands are looking at outsourcing as the way forward. And it's not only going to be devices manufacturing, it's also going to be the creation of a component ecosystem. It's also going to be deepening of manufacturing. And hopefully at some point of time, apart from Apple, India possibly will emerge as an export hub. That's at the broader level. One is trying to respond to your question on the landscape of mobile manufacturing in India.
Sure, sir. That's useful. So maybe I'll slip in one more. Sir, I know you're not giving any guidance, but mobile is a very large part and any delta there could be significant. Since you're putting in capex for the 2 new customers, you'd have some visibility on their contribution for FY24. So if you could just talk about how much could those 2 new customers be in terms of contribution, because that will help us sort of understand the revenue trajectory there.
So, you see, any new customer acquisition, ramping up production, stabilizing production takes some time. And to give some kind of firm number to it is slightly difficult because stabilizing of operations takes time. However, I feel that these 2 new accounts on a combined basis can generate 4,000-5,000 crores of revenue in this current fiscal itself.
That's useful. Thank you.
Thank you. The next question is from the line of Nikhil Agrawal from VT Capital. Please go ahead.
Good evening, sir, and thank you for the opportunity. Sir, I had a question on the mobile phone division. Last quarter, you had guided for 8,000 crores of revenue, if I'm not wrong. And now you are guiding for 6,000 crores of revenue for FY24. So, any reason for this cut?
So I've not cut anything. I have not given any guidance for this year. What I had responded to Renu was that upward ceiling for our PLI, and also there is an overflow provision in the PLI scheme, is 6,000 crores. We're assured of that, but we're confident of surpassing that significantly.
If you listen to the answer which was given in the previous question, clearly, and what was given in the last call, I think so those numbers are almost similar.
Okay, got it. And so one more question. It was like in the last quarter you had mentioned that you would be acquiring a large customer in March. So like any update on that in the mobile segment?
So this is what I just shared in responding to last 3-4 questions, and that we are at a very, very final stage of closing down on a couple of customers, and the manufacturing for these customers should start in the next 3 to 4 months. A new factory is being set up of 320,000 square feet, which will be operational by July, August.
Okay, got it. Thank you so much, sir. That's it from me.
Thank you. The next question is from the line of Aditya Bhartia from Investec. Please go ahead.
So my question was on the capex number, wherein it seems that we have done roughly 170 crore rupees of capex in Q4, given that you had indicated that capex stood at 280 crores for 9 months. Is it mainly on the mobile phone facility that we are speaking about, or there's something more to it?
No, sorry.
Yeah, so Aditya, one, of course, we have done some part of the capex on mobile, but that large part of the capex will happen in Q1. It's currently happening, both on the new plant as well as the machineries or the lines required for those potential customers. I think so the Q4 capex that you're talking about, the 170 crore, a significant portion has gone into a refrigerator plant, which is now hopeful of we will be live with that plant by November. So a lot of advances, machinery, construction of the 20-acre facilities is happening at a very fast pace now. So significant portion of the 170 crores has gone to refrigerator. Mobile is also part of it, and also a semi-automatic washing machine we'll be coming out with a new plant we have taken a new plant which will be operational by July. So construction on that, machineries, all put together.
Understood. And just one clarification. For JioPhone, you had mentioned 0.5 million order book per month. Did I hear that correctly?
That's right.
Yeah. So, but there's not a continuous business. The Jio projects, the Jio orders come in project forms. So the current order book is of this kind.
Understood. And overall, we have the order book for maybe two to 3 months.
Something like that.
Understood, sir. That's very helpful. Thank you so much. Wish you good luck.
Thanks, Aditya.
Thank you. The next question is from the line of Alok Deshpande from Nuvama Institutional Equities. Please go ahead.
Yeah, good evening, everyone, and thank you very much for taking my question. My question was a little bit long term. If you look over the next maybe 3 to 4 years or 5 years, are there any categories within electronics which are completely untapped in the sense that which you're currently not at all entered? Any color you can give on that?
So we feel that, in Dixon's case, our growth journey has been, of course, growth in the existing businesses. In existing businesses, getting a larger share of existing customers and also acquiring new customers. Apart from that, building on our core competence of electronics manufacturing, every year practically we've been venturing into new business. So we started off only with television, lighting, washing machines, air conditioning components, refrigerators, mobiles, telecom devices, set-top boxes, TWS, smartwatches. We feel that this is the current opportunity pool, particularly after the PLI version 2 has been rolled out by the government. A large opportunity can be IT products. So the team is studying the contours of the new PLI scheme. We feel there's a large opportunity for us. So that is what I see as of now. But everything is electronics. Many things will come the way of the industry. And in Dixon, we'll not lose any kind of opportunity. So as of now, what I see in front of us, apart from existing businesses, is the IT products.
Sure, understood. And just one clarification on this, the 2 new potential customers that will come in on the mobile division. So last time when you had given the guidance of mobile revenue going up from 4,000 crores to 8,000 crores, I presume you were assuming that the commercial production there would start probably in the Q1 of FY24. Now that getting pushed out to Q3. Do you still see that kind of quantum of revenue coming in FY24, or you are largely indicating the quantum that can potentially come on an annual basis?
So, any start of a new large account has its own challenges. So I'm not commenting on any number. However, at the same time, we as a team in Dixon are fairly confident of generating that number.
Sure.
And also there has been a small change. Till last time we were talking about 2 customers, including Tino, which we have already announced. Now, including Tino, we are talking about 3 customers.
And also we are talking about Jio, which is already operational.
And Nokia increased quantity. So that has given us more confidence that despite these new customers only running for 6 months of operations, we can still achieve those kind of numbers that we had guided for earlier.
Understood. Very clear. Just one very small question. The margin improvement that we have seen in Q4 sequentially and as well as year on year. Now, a lot of the drivers that were mentioned at the start of the call seem very structural to me in terms of strategic price hikes, cost efficiencies, etc. Now, is that fair to assume that now this, not at the overall level, but across segments, these margin levels become the new normal for this year, coming year?
So please appreciate in Q4, the margins have expanded by 110 bips to 5.2%. Now, are they sustainable? I think we should be conservative. On an annual basis, the margins are around 4.2%, which increased from 3.6% on an annualized basis. We feel that from 4.2%, there is a possibility of improvement by 30-40 bips. But let's see.
So, thank you. It's very helpful. Thank you.
Thank you. We'll take the last question from the line of KS from ICICI Prudential Life Insurance. Please go ahead.
Thank you, and congrats for good set of results. Sir, the question is on lighting and washing machine. So despite all the initiatives in lighting, it is about new category additions of, say, commercial lighting, rope lighting, and one more driver of export. On the other hand, washing machine, we are adding fully automatic, and earlier we have talked about export opportunity as well. So despite that, overall growth numbers are in line with what industry is growing or slightly higher than that. What has happened? Is it because of the industry slowdown? Because earlier we were talking about new customer additions as well in washing machines. So just to get an idea where what's happening on the export side, because that was considered a big opportunity in lighting and more customer addition in fully automatic washing machines. So just your thoughts on, despite all these drivers, why slightly not so muted but moderate growth guidance?
So responding to your question on washing machine, we started with our anchor customer Bosch, and more new customers are being added. Please be rest assured. This customer acquisition is being pursued very aggressively, and it's also maturing. And we are the only large ODM FATL player in the country. So the growth is going to be good. But launch of any new solution to the new customer on a complex product like fully automatic top loading, it takes its own time. And that's the reason the indicative number is slightly conservative. On the lighting side, undoubtedly the domestic market has been flattish. And also the unit price in certain SKUs like LED bulbs and battens have been significantly declining. We are trying to build the volumes there, but the main growth is going to come through addition of new categories, like expanding the product portfolio of ceiling lights and downlighters, launching the strip light and rope light, for which the commercial production is just about to take off, launch of professional lighting, for which our R&D team has been strengthened significantly, and rollout is on the way, and then exports. So I have guided for around 12 to 15% growth in lighting, which I feel that with unit price decline is an aggressive target.
Okay, understood. Noted, sir. So thanks a lot and all the very best.
Thank you so much.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference back to Ms. Bhumika Nair for closing comments. Thank you, and over to you, ma'am.
Yeah, on behalf of DAM Capital, I would like to thank everyone for being on the call, and especially the management for giving us an opportunity to host the call. Thank you very much, and wishing you all the very best, sir.
Thank you, everyone, and thanks, Bhumika. Thanks very much. Really.
Thank you, everyone. Thank you, Bhumika.
Thank you very much. Ladies and gentlemen, on behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your line.